Good morning to everybody. I am Dr.M.Manohar, Associate Professor in the Department of Commerce and Economics, Faculty of Arts and Science, Bharat Institute of Higher Education Research. Today we'll discuss about the subject Introduction of Basic Accounting. Okay. First, what is meant by accounting? Accounting means accounting is the business language of business. The most important functions of a language is facilitate communication. The information about business entities regarding their operation performance and financial status can be obtained from the financial information recorded in the accounting records. The information is communicated to the interested users of business information such as proprietors, management, investors, customers, and the government. The next, what is the meaning of accounting? Accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, interpreting, and communicating financial information. Accounting gives information on the resources available, how the available resources have been employed, and then the results achieved by their use. That is known as the meaning of accounting. Okay. Then the profit earned or loss incurred during the accounting period, value and nature of assets and liabilities and capital can be ascertained from the information recorded in accounts. The next one, what is the definition of accounting? The accounting definition means, according to the American Institute of Certified Public Accountants, defines the accounting means accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money the transaction events which are in part at least of a financial character and interpreting the results thereof. It is known as definition of accounting. Then the American Accounting Association has defined accounting as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. That is known as the definition of American Accounting Association. The next, what are the objectives of accounting? The first one objective is to keep a systematic record of a financial transaction and events. The second one objective is to ascertain the profit or loss of the business enterprises. The third one, to ascertain the financial positions or status of the enterprises. Then fourth one, to provide information to various stakeholders for their requirements, and then to protect the properties and enterprises, and then sixth one, to ascertain the solvency and liquidity positions of enterprises. The next topics, functions of accounting. So what are the functions of accounting? The functions means, the first one functions measurement. So how to measurement the accounting? The accounting measurement means the main functions of accounting is to keep systematic record of transaction. First one, the systematic record of transaction and post to them ledger and ultimately prepare the final accounts. Then accounting works as a tool for measuring the performance of the business enterprises. It is also shows the financial positions of the business enterprises. The first one, measurement. The measurement means the record of transaction, post to the ledgers, and ultimately to prepare the final accounts. That is the first one, measurements. And second one functions, forecasting. So forecasting means with the help of the various tools of accounting, future performance and financial positions of the business enterprises can be forecasted. Then third one, comparison. Third one function, comparison. The comparison means accounting helps to compare the actual performance with the planned performance. So accounting compare between the actual performance and the planned performance. Planned performance, the real performance. Okay. It is also possible to compare the accounting policies. The accounting policies compare with the accounting procedures through the comparison of the actual financial results of the business enterprises with projected figures and standards. Effective measures can be taken to enhance the efficiency of various operations. Then next functions, decision making. Accounting provides relevant information to the management for planning, evaluation of performance and control. This will help them from take various decisions concerning cost, price, sales, level of activity, and then functions. Then fifth one, control functions. Control means an accounting works as a tool of control. The strength and weakness are identified to provide feedback on various measures adopted. It serves as a tool for evaluating compliance of business policies and programs. Then sixth functions, assistance to government. So how to help the governments? The government needs full information on the financial aspects of the business for various purposes, such as taxation, grant of subsidy. Then accounting provides relevant information about the business to exercise government control on business enterprises. This is the assistant to government functions. The next topic, bookkeeping. So what is meant by bookkeeping? So bookkeeping is the process of recording financial transaction in the books of accounts. So bookkeeping means the financial transaction recording in the books of accounts. It is the primary stage in the accounting process. It includes recording the transaction and classifying the same under proper heads. The bookkeeping work is a routine nature. The transaction may be recorded in the accounting notes, books and ledgers, or may be recorded in computers. So bookkeeping is a primary process. Okay, bookkeeping is the primary process and routine nature. The transaction day-to-day operative, day-to-day transaction recorded in the entries. The next one, methods of accounting. So what are the methods of accounting? The methods of accounting means calculation of accounting, the single entry system and the double entry system. Okay, there are two types of methods of accounting are available. Then single entry system means single entry system introduced by according to Professor Fokler. The double entry system introduced by according to Professor Luco Faciali. Okay. The next topic, classification of account. So what are the classifications of accounts? The first one, personal account. Second one, real account. Third one, nominal account. Okay. The first one, personal accounts. The personal accounts may be classified into three categories. The first one, natural person, and second one, artificial person, and third one, representative personal account. Okay, so personal accounts means natural persons, we are also natural persons. Artificial person means we will create a persons, and it is a legal rights. Then representative person means it is a third one, personal accounts. Okay, the next, real accounts. So what is the real accounts? So real account may be classified into two categories. The first one, tangible real account, and second one, intangible real accounts. So tangible real accounts means the visible of the assets. Intangible real accounts means not visible for the invisible of the assets. For example, goodwill, patent rights, trademark, that is also, these are also intangible assets. Okay. The third one, nominal accounts. So what is the nominal account? So nominal account means debit all expenses and losses. Credit all income and gains. That is known as the all expenses and losses, income and gains. This is known as the nominal accounts. The next topics, accounting rules. So what are the accounting rules? The accounting rules means there are three types of accounting rules are available. The first one, personal accounting rules. Second one, real accounting rules. Third one, nominal accounting rules. So there are three types of accounting rules are available in the financial accounting. The first one, personal account. So what are the personal accounting rules? Debit the receiver, credit the giver. The benefit received, debit the benefit receiver. Okay, credit means the benefit giver. So debit means benefit receiving aspect, credit means benefit giving aspect. Okay, so personal account rules means debit the benefit receiver, credit the benefit giver. That is known as the personal accounting rules. Then second one, real account. So what are the real account rules? So debit what comes in, credit what goes out. So debit what comes in, credit what goes out. That is the real accounting rules. Then third one, nominal account. So nominal account means debit all expenses and losses, credit all income and gains. That is known as the nominal accounting rules. So these are also golden accounting rules. The next one, accounting concepts and conventions. So what are the accounting concepts and conventions? So accounting concept means the accounting procedures and policies. The accounting concepts, procedure and policies framed by the Indian accounting standards. Okay, so Indian accounting standards are, there are 32 accounting standards are available. So our accounting policies framed by the Indian accounting standards. Okay, so many types of accounting standards are available. 1 to 32 are available. So financial accounting policies framed by the accounting standards. The first one, accounting concept means business entity concept. So first concept, business entity concept. So business entity concept means for every business is separated from the owner. So business is separated and owner is separated. Okay. So we should prepare for the financial accounting only for company. So not for owner. Okay. So we prepare the accounting financial records are prepared only for company. It is not for owner. So the business entity concept, it should be mentioned for the business is separate and owner is separate. Okay, that is the first one, accounting concept, business entity concept. And second one, money measurement concept. So what are the money measurement concept? So money measurement concept means all the recording transaction. So all the recording all the transaction, it should be termed the measurement of money. So all the transaction, it should be converted into monetary value. So measurement in money. Okay. So money measurement concept. So even all this transaction, it should be any monetary value. It should be recorded in the measurement of money, in terms of money. Okay. Then third one, going concern concept. So going concern concept means third one. So the company, men and may come and go. So the company is going on long life. The company is going on long life. It is useful for the long life of the assets. The company is the company's life still going to the long. Okay. Then fourth one, cost concept. So cost concept means every transaction it should be measured for the cost. So costing means for a period of 12 months. Okay. So in the period of 12 months between the any expenditures, any cost incurred the terms. That is a cost concept. Next one, dual aspect concept. So dual aspect concept means for assets equal to liabilities. Assets equal to liabilities. The dual aspect means for every debit there should be a corresponding equal level of credit. So both the dual aspects of concept. Okay. The next one, periodic concept. So periodic concept means the accounting transactions recording for a period of 12 months. The first year up to 31st March, a period of 12 months. That is the accounting transaction 1 year. Okay, a period of 12 months, whatever it may be, the any expenses, income, revenue, gain or losses, it should be calculation of the 12 months. That is a accounting period. Okay. Next one, matching concept. So matching concept means for every revenue equal to the expenses, for every expenditure equal to the income. Okay, that is a matching concept. So particular period, that is the accounting period. Particular period, it should be earned income and expenses. Okay, that is the match for the income and expenses. That is a matching concept. The next one, objective evidence concept. So objective evidence concept means for every company, it should be have own objectives. Okay, so the objectives, the primary objectives or secondary objectives, whatever it may be. So objective evidence means a company, whatever it may be, the company objectives is followed by the objective evidence concept. Okay. The next one, accounting conventions. So accounting conventions, there are the 4 types of conventions are available. The conventions of consistency. Second one, the conventions of full disclosure. And third one, conventions of materiality. And fourth one, conventions of conservatism of prudence. So conventions of consistency, conventions of full disclosure, conventions of materiality, conventions of conservatism of prudence. These are 4 types of are available. The next, we will prepare the journal entries. Okay. So first, transaction. Anand is started dealing in textiles for the following transaction. First, the journal entries for the month of January 2018. January. Okay. So Anand is the trader dealing in textiles for the following transaction. First, the journal entries for the month of January 2018. So already given to the problem for find out the journal entries. You should prepare for the journal entries. Okay. So journal entries means the primary entries for every transaction. It should be recorded in the journal entries. Okay. That is known as the journal. So first primary entries. Okay. So first transaction, January 1st, commenced business with cash rupees 70,000. Commenced business with cash rupees 70,000. So what are the journal entries for this transaction? Okay. So for every transaction should be having two aspects. So first one benefit receiving aspect, second one benefit giving aspect. Okay. At the same time, for every debit there should be a corresponding equal level of credit. Okay. So commenced business with cash rupees 70,000. Okay. So this transaction having two aspects. The first one cash account and second one capital account. Okay. So cash is comes in. So we should prepare for the financial accounting for the financial company institution. Okay. So the cash is comes in. So cash account and capital account. So cash is comes in. So cash is a real account. So what are the real account rules? So debit what comes in, credit what goes out. So cash is comes in. So cash account debtor. So cash is comes in the companies. Okay. So cash account debtor. Then second capital. So capital is contributed to the owner. Capital is contributed to the owner. So owner is the personal account. So personal account rules means debit the receiver, credit the giver. Okay. So owner it is a not a benefit receiver. It is a benefit giver for the company. Okay. So this transaction means commenced business with cash rupees 70,000 for the journal entries cash account debtor to capital account. Cash account debtor to capital account. Okay. Rupees 70,000. Cash account debtor rupees 70,000 and capital account debtor rupees 70,000. The narration means being capital contributed. Being capital contributed. Okay. That is the first one, journal entries. Okay. Then second, January 2nd, purchased goods from X and Co on credit. Rupees 30,000. Purchased goods from X and Co on credit. Rupees 30,000. Okay. So for this transaction should having a two aspects. So goods purchased from X and Co on credit. This is a credit transaction. It is not a cash transaction. So what are the journal entries? So credit transaction means purchase. Okay. So this transaction having two aspects. So first one, purchase goods from X and Co. So purchase account debtor. So purchase is a real account. Okay. So what are the real account rules? Debit what comes in, credit what goes out. Okay. So purchases comes in. So purchase is a real account. So purchases comes in. So purchase account debtor. Rupees 30,000. Then credit purchase. So the purchase goods from X and Co. So X and Co is a personal account. X and Co is a personal account. So X is a personal account. So personal account rules means debit the receiver, credit the giver. So the X is a benefit giver. X is a benefit giver. It is not a benefit receiver. Okay. So purchase means real account. So purchases comes in. So purchase account debtor to X and Co. That is a credit transaction. That is a credit transaction. So X is a personal account. X is a personal account. So it is a credit transaction. So purchase account debtor to X and Co. Rupees 30,000. Then narration, being goods purchased from X and Co. Being goods purchased from X and Co on credit. This is the second journal is for the narration. The next, third one, cash deposited into bank rupees 40,000. Cash deposited into bank rupees 40,000. So this transaction having two aspects, two accounts. Okay. The first one, cash deposited into bank rupees 40,000. So bank is a received. Bank is a received. So bank is a personal account. So bank account and cash account. There is a two aspects to have accounts. First one, cash deposited into bank rupees 40,000. So bank account and cash. Bank account and cash. So bank is a personal account. Bank is a personal account. Okay. This is a artificial person. So bank is a personal account. So what are the personal account rules means? Debit the receiver. So cash deposited into bank. So bank is the received person. Bank account debtor. 2. The cash is goes out. The cash is goes out. So cash is a real account. So what are the rules for the cash account, real account? So debit what comes in, credit what goes out. So the cash is goes out. Okay. So bank account debtor. So bank is a personal account. So it is a benefit receiver. So bank account debtor to cash account. Bank account debtor to cash account. Okay. Rupees 40,000. Then narration means cash deposited into bank. cash deposited into bank. That is the narration. Narration means the short form of the transaction. Okay. Then fourth transaction, bought a building from L and Co on credit 95,000. Then January 4th transaction, bought a building from L and Co on credit 95,000. So bought a building from L and Co on credit 95,000. So building is a asset. Building is a asset. So the building, it is based on the asset. It is a real account. So what are the real account rules? Real account rules means debit what comes in, credit what goes out. So building is comes in. Building is comes in. So building account data. Then the building purchased from L and Co. So L and Co is a personal account. Okay, it is not a cash transaction, it is a credit transaction. So building account data, building is comes in. So building is a real account. So building real account rules means debit what comes in, credit what goes out. So building is comes in. So building account data. 2, the purchase from L and Co. So L and Co is a personal account. So it is a benefit receiver. Okay, so building account data to L and Co. rupees 95,000. Building account data to L and Co. rupees 95,000. The narration means building purchased from L and Co on credit. Building purchased from L and Co on credit. Okay, that's all. Then fifth transaction, cash withdrawn from bank for office use rupees 5,000. Cash withdrawn from bank for office use rupees 5,000. So this transaction having two accounts. Cash withdrawn. So withdrawn means drawing. Okay, that is the office use. Okay, so cash is comes in. Cash is comes in. Cash withdrawn from bank for office use. So cash is comes in. So cash is a real account. Cash is a real account. The real account rules means debit what comes in, credit what goes out. So cash is comes in. So cash account data. 2, the bank this is from the bank. So bank is a personal account. Okay, so bank is a benefit giver. So bank, it is not a benefit receiver, it is a benefit giver. So bank is a benefit giver. So cash is comes in. So cash is a real account. So real account rules means debit what comes in, credit what goes out. So cash is comes in. So cash account data. 2, bank is their personal account. So personal account means debit the receiver, benefit receiver, credit the benefit giver. So bank is a benefit giver. So to bank account. Okay, so cash account data 5,000 to bank account rupees 5,000. Okay, so the narration means cash withdrawn from bank. The next transaction, cash withdrawn from bank for personal use of Anand rupees 4,000. Cash withdrawn from bank for personal use of Anand rupees 4,000. So personal use. So personal use means own use. Okay, so the personal use means drawings. Cash withdrawn from bank for personal use of Anand. So personal use means drawings. So drawing is the business entity concept. The accounting concept, it should be mentioned for the owner is separate, business is separate. The owner is drawing from bank. It is a treatment of personal use, treatment of drawings. Okay, so cash withdrawn from bank for personal use of rupees Anand. So drawing account data to bank. Drawing account data to bank. So the bank is the benefit giver. So personal account. So personal account means debit the receiver, credit the giver. So bank is a benefit giver. So drawing account data to bank. Okay. So being rupees 4,000. Drawing account data to 4,000 to bank 4,000. Okay. So the narration means cash withdrawn from personal use for Anand. The next transaction 7. Towels given as a charity is rupees 3,000. Towels given as a charity is rupees 3,000. So towels means that is a assets. Okay, the towels means that is a assets. That is a charities. Towels given to the charities purpose. So charities is a received person. So charities account data to purchases. So charities account data 3,000 to purchases account. Okay, the narration means goods given for charities. Goods given for charities. Okay, The next transaction, search taken over by the Anand for personal use. Search taken over by Anand for personal use, rupees 12,000. The personal use means the transaction, it should be mentioned for the personal use. Okay, personal use means drawings. The owner should taken away from the cash. Drawings. The owner, it should be taken away from the check. It should be a bank. The owner it should taken away from the goods. We have purchase. Okay, it is a drawings account to purchase account. So personal use, the already given to the problems, search use for personal use mentioned. So personal use means drawings. Okay, so the owner is goods taken away from the charities. Okay, so goods purchases, the already the goods taken away from the company, the goods is reduced, so the purchase is reduced. So the drawing account data to purchase account. Okay, the nearest means goods taken over for a personal use. Okay, the next transaction, sarees distributed as a free samples. Sarees distributed as a free samples, rupees 3,000. So sarees distributed as a free samples as a 3,000. Saree distributed the sampling. For example, some of the goods free samples given to the company. It's for the advertisement purpose. So the sales promotion account are sales promotion account are to purchase account. Sales promotion account are 3,000 to purchases account 3,000. So the narration means goods distributed as free samples. Goods distributed as free samples. The purpose of here, the expansion of business. There is a advertisement. That is a tactics. One of the tactics, free samples. Then last transaction, goods tablecloths used for office use. Goods tablecloths used for office use, 200. So goods used for office use, it is not personal use. It is a office use. So goods tablecloth used for office use is 200. Okay. So office use, it is not personal use. So office use, it should be mentioned for drawings. Okay, it is not mentioned for office use. It is a personal use. It is not mentioned for the personal use. This is used for office use. Okay, so official expenses account data, office expenses account data to purchase account, office expenses account data to purchase account, office expenses account data 200 to purchase account 200. The narration means goods used for office use. So it should not mention for the personal use. So in case personal use, it should be mentioned there. It should taken for the drawings. Okay, it should not mention for the personal use. It should be mentioned for the office use. Okay. So this is the for journal entries. Okay, this is the, all the journal entries transactions. Thank you.